Hi there, good to see you. Hopefully you're having a great holiday weekend. I'm Jeff Smith. This is Leading Edge, filling in for Jerry Anderson this week. Well, back when I was in high school, Bruce Springsteen had a song out there, and the chorus was, "One step up, two steps back." You know that song? Well, it can pretty much sum up what we've been witnessing when it comes to the economy over the last year or so. Coming up in just a few minutes, I'm going to talk about those wilting retirement accounts, what you should be thinking, what you might need to do here going forward. But first, we want to discuss what this borderline recession is doing to the momentum we had here in the Glass City. Do we still have it? Let's welcome in Commissioner of Economic Development for the City of Toledo, Brandon Selhorst, joining me here on Leading Edge this week. Brandon, welcome. Thank you so much for taking the time.
Thank you for having me. Pleasure to be here.
Absolutely. So let's dive right into it. First, let's review where we are as far as the year 2022. Is there momentum right now as we head into July?
Sure. Well, Jeff, we certainly believe that there's momentum in the Glass City. Site Selection Magazine, which is the holy grail for economic development industry rankings, has ranked the city of Toledo in the top 10 for new business investment. This is a ranking that we've received for the past 6 years that has really validated our location. We've had a number of monumental historic wins in economic development for the city with the Cleveland Cliffs project. That was an over $1 billion investment on our riverfront for a new steel production. We've seen Southwick Mall receive a $25 million investment for an Amazon fulfillment center. We've also worked with the Jeep plant on an expansion onto a former city property at the textile leather property that's bringing 300 jobs with it. We've historically not seen all of this momentum at one time across a number of different sectors. And I think that's what gives us the most optimism about the future in Toledo in particular, is that we're seeing investment all throughout the city and in a number of different industries.
Let me ask it this way. Have you seen a little bit of a let-off of the gas over the last 6 months? Because obviously coming out of the pandemic, or let's go even further back, let's say pre-pandemic, it just seemed like everything was really kicking, everything was happening. Obviously, so many stories about downtown development, what we wanted to do as far as our neighborhoods were concerned, pandemic hits. We try to make it through all of that. And then we get out of the pandemic, and now, Brandon, we're looking at a possible recession.
Yes.
So how in your office are you guys reading that?
Well, so taking us back to 2020, because March of 2020, a few days before Governor DeWine shut the state down, we ground broke on the Southwick Mall project, which was the Amazon project.
Sure.
We had a number of major projects in the pipeline, like the Jeep project and several others, that we were fearful that they weren't going to move forward because of the pandemic and the unknowns. And for a while there, everyone did kind of press pause on the project just to see how the world was going to shake out. What we experienced was these projects kind of put the pedal to the metal. You know, they happened at a much rapid pace because, especially for logistics and distribution, there was a big need to fill because we were at home and we were buying things online. So those projects certainly sped up in a way that we did not anticipate. You know, Toledo as a tertiary market, we often receive a development boom much later than the New Yorks or the Columbuses of the world. And you're right, back in 2020, we felt like we were starting to really feel that with the projects we were working on. The pandemic, in a number of ways, sped up a lot of the major projects that we were working on as well. As we look today, we have projects that we are working on, major projects that we're working on that are certainly struggling, that we are trying to save. We've got projects that have, called it quits and said, we'll have to revisit this at a later date. But the projects...
Are there any of those that you can name for our audience today?
None that were publicly announced already. The ones that I'm referencing are more of the housing related projects, some economic development like job creation projects certainly, but there's a funding gap, quite frankly. And Toledo has historically struggled with this math problem. Our construction pricing in Toledo is equivalent to that of most of the country. But our rents that we can command from residential, retail, industrial, office are a fraction of what you can get in other markets. So said another way, Jeff, it costs just as much to build an apartment complex in Toledo, generally speaking, as it does Columbus, but the amount of rent that you can charge in Toledo to, service your debt service, pay your bills, and cash flow is a fraction of what you can get in Columbus. And so that has always been a challenge for us. And that's why tools at the federal, state, and local levels are so important to making those projects happen.
Well, I think that brings me to what I wanted to ask you as well today is something that we are watching across the board, and that is the rising cost of labor, the rising cost of product,
Right.
and how is that also getting in the way?
Right. The pandemic exacerbated all of the math problem that I just mentioned.
Supply chain issues, right?
Supply chain. So we have rising construction costs. We have inflation. We have, at the same time, we have labor shortages, right? Material shortages. So lead times on ordering products for these new buildings, for these new apartment projects is too long, and time is money, right? And that's never been more true than it is right now, unfortunately, with rising interest rates.
And we're not talking specifically projects downtown either. These are all over across the city?
All throughout our city.
Okay.
All throughout our region,
Yeah.
if we're honest. I mean, this isn't a Toledo problem. This is a Northwest Ohio challenge. This isn't a challenge that's unique to Northwest Ohio either. All across the country, my colleagues are experiencing this challenge.
Sure. Areas of town where growth is still possible. Let's talk about that because as you and I discussed before we came out here today, we are lifelong Toledoans.
Yep.
And obviously our heart is in the right place as far as the growth, the development, the positivity that exists here in our area. Right. However, as we look at these areas where growth is possible, areas that I have known over the years, the north side of town, the west side, you can go all across the map. I don't even have to name them.
Right.
Where is growth still possible? Where are you guys earmarking for growth?
Well, as I mentioned earlier, we're experiencing growth all throughout the city. We've got major projects. So North Toledo, our Northtown project, we're getting ready to put a shovel in the ground on that project in a few weeks. That's the $85 million redevelopment of the former Northtown Mall site, going to be a huge catalytic impact on that whole corridor, and a mall site that sat vacant for more than 10 years. We're seeing, obviously investments in downtown area, in our historic industrial area, which is North Toledo, but even in areas like Southland, South Toledo, Southland Shopping Center. Ernest Brew Works is putting a $4 million, new brewery investment there. We've also coupling that with a affordable housing project.
A project that I have to mention has had to hit pause a couple of times.
Yes, exactly. So, we're trying to do everything we can to help move these projects forward, help the projects that are in the pipeline continue to move. But, there's a lot of things that are out of our control, quite frankly, that make that a challenge. So, but I am very optimistic about Toledo and the prospects that we have going forward, despite a potential slowdown in investments. Because the projects that I just mentioned, for example, Northtown Mall, that's moving forward. Ernest is moving forward. There's a number of projects that are moving forward.
Is Joe Public, the Northtown Mall I knew, right? That site being used for purchases and whatnot and fun and movies, whatnot. Red Baron Game Center. I'm dating myself on that. But as you look at that site, is that going to be usable for an everyday Toledoan?
Well, it certainly could be. So what they are proposing there is a speculative industrial building. And Jeff, in today's world, speed to market is everything for these or for these businesses. So they're going to put 3 spec buildings on that site. We haven't had a spec building in Toledo since Overland, and look how successful Overland Industrial Park has been. The everyday Toledoan, we anticipate that site could employ over 2,000 people. The Overland Industrial Park, which is about a fraction of the size of Northtown Mall, employs about 1,000 people today between Dana, DMS, and All Phase Electric. So this being double the size, and we're going to have more square footage in buildings.
Huge impact on the economy.
Huge impact, huge job creation. Hopefully, a future major employment center for the city.
Brandon, stay right there. We've got to take our first break of the morning here, but when we come back, I'm going to talk a little bit about the Peloton development, how that went south, and what it means for Toledo going forward. Welcome back to Leading Edge for this week. Jeff Smith in for Jerry Anderson. Brandon Selhorst joining us from the city of Toledo, economic development, his game. And Brandon, we wanted to talk a little bit. We talked about spec sites. You mentioned the one going into the Northtown Mall area, but another one that kind of plays into Toledo's future. Talk about it.
Sure. So it's no secret that a year ago, Peloton announced that they were having construction of their first U.S. manufacturing plant right here in Northwest Ohio in Troy Township. Unfortunately, due to a number of complications with the company, they had to, hit the pause button on that project and are no longer moving forward. While that was a huge economic development win for our region, we still see it as a major opportunity. The company actually still moved forward with constructing that 1 million square foot building. And so we see that as an opportunity.
How does Toledo play into this, I guess, first and foremost?
Sure, absolutely. Sorry, let me back up.
No,
so
you're fine.
We have what's called a joint economic development district with Troy Township, where the city of Toledo receives a portion of the income tax that is generated within that district.
Gotcha.
And so the Peloton site is located within that JED, and we provide other services to Troy Township
Sure.
for that agreement. So the city was set to benefit, financially from that deal. It was a major deal for us. But we still see it as a major opportunity. When Peloton announced that they weren't moving forward, that was an announcement that rippled across the world, quite frankly. But it's also an announcement that said Northwest Ohio has a 1 million square foot spec building available to companies that are looking for speed to market. And as you know, speed to market right now is everything for these companies. So with the Intel announcement in Columbus, with these circulating electrical vehicle projects, we're very hopeful that we'll land a big job creation project at that site.
And are you looking down the road to fill that with something, I guess, techie, if you will?
It's going to be dictated by the market.
Yeah.
We know that we are competitive in manufacturing. We have a really skilled workforce for that. Companies locate here specifically for that. It could be tech, but I think we are competitive in manufacturing, and it could lend itself well to that.
So as you go into the office over the next few months and the possibility of this economy slowing down, we're keeping our fingers crossed that it does not, of course, but as it does, there is still positivity rolling out as far as what can be done, what can be accomplished?
Absolutely. I mean, as we look to attract the next Peloton within the city, because you have to remember.
Maybe not Peloton.
The next major big thing, yeah, that will be sustainable. Toledo, our main source of revenue is income tax, which most of the country is not funded that way. We're unique in that here in Ohio. Having these big job creation projects within the city is incredibly important. The challenge is we don't have the land. And in order to compete for these sites, these opportunities, you have to have a site ready and available to go. So Southwick, Textile Leather site, Northtown, the Ironville property where Cleveland Cliffs are. These are all great examples of properties that the community has put back to productive use that have created over 3,000 new jobs for our community.
Third and fourth quarter are going to be bumping there. There's
We
going to
hope
be a lot
so.
of activity.
We hope so.
Brandon, thank you so much.
Thanks,
We
Jeff.
appreciate it. The next segment coming up, we will be joined by Alan Lancz to talk about those 401ks. Stay with us. Welcome back here on Leading Edge. Jeff Smith once again filling in for Jerry Anderson this week, bringing in Alan Lancz, joining us to talk a little bit about your 401k, the talk of recession and where the economy is right now, inflation and everything else. Alan and I have known each other for a number of years, so it's so good to see you again.
Likewise, Jeff.
Thank you for being here. So I guess let's dive right into it. Inflation, recession, we're all hearing the talk. How should we be reading this right now?
Yeah, it's been an amazing time period. I mean, the last 12 years before 2022, the stock market, the bond market, even the last 40 years, the bond market's been in a bull market, meaning that interest rates have gone down for 40 years. So starting in 2022, we realized that we're going to have a different environment. Interest rates are going to go up, inflation's going to kick in, and investors have to change their strategy. And I think that's the biggest note for 2022 is that if interest rates go up, you're going to lose money in bonds. In the first quarter, it was a disaster for stock market. The bond market actually even did worse.
Yeah.
Now, the second quarter, the bond market has rebounded because now people are worried about recession, et cetera. So if there is a recession, then interest rates might not go as high. So it's a situation where you have to be nimble and really protect your assets. We like real assets. Energy had gone down 10 years in a row when bonds and growth stocks were going up.
We talk about this every day during the 5 o'clock show, and Dan Cummins comes in and we talk about the day that was on Wall Street. But is recession inevitable at this point? Is that how you're reading it?
Well, yeah, I mean, if we keep on increasing interest rates, yeah, that's the goal of recession, to kill, higher interest rates will kill basically the economy, leads us to a recession, but it'll also kill inflation, and that's the goal. There's a fine line, it's called a soft landing, Jeff, where if they tweak it just enough, we might avoid a recession, but as you can tell with the stock market, closing the second quarter is a disaster. Bonds have done well, so now it's a good strategy to maybe lock your unless you think it's going to be a big recession, lock your gains in bonds and start nibbling on other areas. In April, we talked about taking profits in commodities. Energy was up 60% the first 4 months of the year. Yeah. Now energy's gone down. So there are ways to make money. It's just a matter of taking your profits when the market gives it to you. If you're a traditional investor, 60-40, 60 stocks, 40% bonds, I would avoid long-term bonds now. Because even if interest rates don't go up as much as people think, inflation will really erode your bond power, and that's where it really hurts the 401ks. If you're losing money in stocks and in your bond funds, you're getting a double whammy, and if you're close to retirement or in retirement, you can't afford it.
Well, that was one of the things I was going to ask you today was, if you're in that 40 to 60 years of age range, unless you are just extremely wealthy, your 401k is not looking real good. You've gone through a lot of bumps over the years, maybe even during COVID, maybe job loss, maybe something along those lines. So how do you weather this storm? Do you play a more aggressive hand, or do you ride this thing out and be more conservative?
I think you have to make changes. You have to get into real assets, inflation hedge. You got to avoid bonds. Bonds are up here the last couple of months because of the recession. So I wouldn't be in long-term bonds because you're going to lose money, whether it's inflation eroding or losing principal. In 1994, the average bond fund lost 20%. People in 401ks, you talked about in the beginning, they think bonds are safe. It's time to, really put away the traditional strategies and really see that this is a 70s type environment. It's not your traditional, I'll protect my money in bonds. If the stock market goes down, bonds will go up. So I think you really have to be nimble and strategic and more defensive. I wouldn't, like you said, bet the ranch because I'm down now and try to make up for it. Right. But all of it depends on your risk tolerance, your time horizon, and things like that. But
you've told me over the years the Dow it's a tough number to read. It's not something that explain that a little bit, because I remember in our conversations you've said when we hit that 30,000 mark or when we hit the 35,000 mark, it's really not a barometer for Joe taxpayer.
Yeah, it's really difficult. It's 30 stocks, so the S&P 500 is a more representative sample. But even to give you an idea, if you invest in the S&P 500, you own a lot of travel companies. And really the cruise lines and all that, the companies had rebounded, and it didn't really make sense because they took on a lot of debt in the survival with COVID, et cetera. So they're not the same type of companies. There's a lot more risk. And I think that's where the average investor is really exposed because they need that knowledge. And the people that can least afford it are taking the most risk without understanding it. And that's what I think, we really want to, as far as the viewers to know, is if it's really a good time to review and make sure, because the times are different than, let's just ride it out and that type of thing.
As a kid of the early 70s, I know savings accounts used to be a very, very safe way to go with your money, and obviously the percentages were sky high. We're starting to see those percentages go back up. So do you see that trend continuing?
Yeah, I think that's what the Fed's talking about. That's why they're increasing interest rates and what have you. 6 months ago, you could barely get a 1%, 1.5% CD. Now we can.
You were lucky to get 0.4.
Exactly. And now we can get like 3.5%, 4% for 2-3 year, not a long term. You don't want to go long term, but 2-3 years for your safe money is good from a standpoint of getting close to 4%. Because if you're in a bond, you can lose principal. Yeah. If you're in a CD, at least with the $250,000 limit, you're going to be protected. And those are the strategies you need. Own some real assets, own some inflation hedges, and really make sure you understand the risk you're taking.
Your most recent Lancz letter, your first line in here, stock market volatility has been at extremes not seen since 1928. 20s weren't a great time for the stock market.
Yeah, and we're ending, as far as Thursday, the second quarter. It's the worst first half of the year since 1970. The 70s weren't a good time either because we had inflation, we had the skyrocketing interest rates. So again, if that
And
unfolds,
skyrocketing gas prices, who would have known?
exactly, and if that unfolds, it's very difficult for paper assets, stocks, bonds, et cetera. You want to own real assets.
What is your read on the last 6 months of the year?
Oh, the next 6 months going, I think it's still going to be challenging, but there's, I would start putting money in as prices go down into high quality income type companies. And if the battered companies that are down 70% continue to go down, selectively by the leaders in that. That's where you take that little risk to make up for, if you're still highly in the stock market and, get out of the bonds, because I think there's just too much risk, especially in long-term bonds.
And then in the last 30 seconds, Alan, the midterms that come up, how much do those play into it?
Yeah, it could change energy. Energy had such a good, first half of the year, and if things change there, all of a sudden, the spigot's open again on the energy area. You might see energy go down, and that would be good because it's high energy costs. It's like a tax on the investor. It's hard for the economy. It's hard for the general public, just like high food prices. So that's why the 70s were so difficult.
Yeah, and I know it's making a lot of people antsy out there, but I appreciate you being a voice of calm and a voice of understanding. Thanks, Alan.
Oh, my pleasure, Jeff.
Absolutely. Stay right there. We'll wrap things up for this week right after this. Well, for a final time this week, a big thank you to my guests here today, Brandon Selhorst from the city of Toledo, as well as Alan Lancz from Alan Lancz & Associates. If you missed any part of our conversation here today, you can check it out on our YouTube page. Check it out on youtube.com. Look for WTOL. My name is Jeff Smith. Have a great rest of your holiday weekend.